All right, let's talk about Rezolve AI. This is a stock that has just been on an absolute tear lately. But here's the crazy part. This whole thing, this huge bet, it all hinges on one single day. Let's get right into it.
Okay, first things first. Just look at this number, 67.27%. That's how much Rezolve AI has shot up since December 19th. I mean, that is a huge jump in just a few weeks. You can just feel the hype and the tension building around this thing.
So, you gotta ask, right? What is driving all of this? Is it amazing earnings? Some groundbreaking new product? Nope, it's none of that. The entire market is basically just waiting, holding its breath for one specific thing to happen.
And that one thing is an event the company is scheduled for January 13th. Seriously, this is the day. It's the moment everyone is laser focused on. You could call it a make or break day because it's either going to justify this massive run or, well, the whole thing could come tumbling down.
And you know, the stakes really couldn't be any higher. We've all seen this story play out before, right? A company hypes up a big announcement, the stock goes nuts in anticipation, and then the actual news has to meet these impossible expectations. Well, right now, Rezolve AI is sitting squarely in that hot seat.
So what do the company actually say they're going to do? Well, in their own words, they've promised to address the significant gap between current market consensus and Rezolve AI's contracted and visible revenue base. Now, that's a pretty bold thing to say. They're basically throwing down the gauntlet and telling Wall Street, hey, you've got us all wrong. You're undervaluing us, and we're about to prove it. Okay, so what are people actually waiting to hear on this big day? It really comes down to three main things. First, we're looking for their official 2025 revenue guidance. The market's hoping for something over $200 million. Second, and this is the big one, the real headliner, is their 2026 target for what's called annual recurring revenue, or ARR. The number being thrown around there is a whopping $500 million. And of course, everyone's listening for any juicy details on future growth and new contracts.
Now, I just mentioned ARR, and that term is so important here. It stands for annual recurring revenue. Think of it like this. For any company that runs on subscriptions, ARR tells you how much predictable, locked-in money they can count on coming in every year. For investors, seeing a high and, more importantly, a growing ARR is a huge green flag. It screams stable, scalable business.
So with so much on the line, you get this classic Wall Street showdown. It's the bulls versus the bears. In one corner, you've got the bulls who are convinced this company's about to drop some mind-blowing news. And in the other corner, you have the bears, who are basically betting that this whole thing is a house of cards ready to collapse.
Let's really dig into what each side is thinking. The bulls, they're thinking the guidance won't just be good, it'll be incredible. They're hoping for something that proves the stock is still a total steal. And they're also eyeing the possibility of a short squeeze. Now, the bears are looking at that 67% jump and saying, hold on. All the good news is already baked into the price. They think this is a classic sell the news setup, and they're pointing to all the people betting against the stock as proof that they're not the only ones who are skeptical.
And that brings us to the bears' favorite tool, something called short interest. All that means is the total number of shares that have been sold short, basically. People are borrowing shares and selling them, hoping to buy them back later at a lower price. So when you see a high short interest, it's a clear signal that a lot of people are actively betting for the stock to fail.
And when it comes to Rezolve AI, wow, the number is pretty staggering. Almost a quarter of the company's tradable stock is being shorted. That is a really, really high number. It just goes to show you how intense this fight between the believers and the non-believers has become.
Okay, so the battle lines are clearly drawn. Now let's look at the battlefield itself. These are the specific price levels that traders are glued to, watching to see which side is gaining ground.
So here's the play-by-play. For the bulls to declare victory and keep this rally going, they need to smash through that $4.04 resistance line. Their ultimate prize is up there at $5.33. But for the bears, they're hoping to see the stock fall below its support floor at $3.54. If that happens, it's a major win for their side.
But you know, when you strip it all away, it really all comes back to this one number, $500 million. That's the 2026 ARR target that's fueling this entire bull run. If the company comes out and confirms that number, or even better, raises it, things could get explosive. But if they hesitate, if they backpedal at all, well, the bears might just get the last laugh.
So as we get closer to the big day, it's just a fog of uncertainty. Nobody knows for sure what's going to happen. But we can break down what happens next into a few key factors that will really decide which way this thing goes.
Okay, so there are really three things you need to keep your eye on.
The first is the most obvious, the guidance itself. Do they meet expectations, beat them, or do they miss? The second thing is the wider market. Some big piece of economic news could drop and change the mood for everybody. And third, we have to talk about that battle with the shorts. If the news is really good, that huge number of short sellers, that 24%, they might be forced to buy back their shares to cut their losses. That's what a short squeeze is, and it can send a stock absolutely to the moon.
And all of this leads us to the one question that every single person watching this stock is asking. After a 67% run-up, before we even hear the news, is all of the good stuff already priced in? That right there is the $500 million question, and we're all going to find out the answer on January 13th.